Alright, what's good YouTube? It's Matthew and I'm back with another video. I know it's been a while since I posted on my YouTube channel, but I'm hoping that this year there'll be more consistency from my side on my YouTube because I've been a bit conflicted as to what kind of content I want to post and I want to share with you guys. But sometimes when you overthink things, that's when you actually don't get anything done. So let's just get straight into the video and we'll see what we do for the other videos. We're going to look at a trade that I took yesterday. Yesterday was Wednesday, the 25th of January, and we are basically going to look at how I caught it and what I was looking for on US30. Obviously, by the thumbnail, you guys know how many pips I already caught. So we just want to take a look at how I would have broken it down if I was looking at it for the first time. All right, so we're obviously looking and talking about this move over here. All right. Pretty much a standard, not standard, but a textbook move. So we just want to take a look at how, this move, what influenced this move, and how you would have caught this move if you were in my shoes. All right. So as you guys can see, I did take a loss. All right. So the first trade that I took was a loss, and from there, I was able to take that trade and actually be patient. Obviously, because that's one of the most important things. You got to be patient. And then after taking that loss, I went in again and I actually got a good risk reward ratio, number one. And my entry rules were met. I even posted on my Instagram actually when I first took the trade. I even said this trade did not meet my entry requirements, but let's see how it goes. All right. So if we take a look at what we have here, on the 30-minute time frame, because I took this trade on the 30-minute time frame. So what we actually had was a resistance, or what we actually still have is a resistance over here, right? And then what you have here is a support. So for my support, I used this area over here. I noticed that the overall trend was a buy, all right? So we were going up. Of course, we've been stuck in this range, and in the range, what I like to do is buy low and sell high. Okay, so now what we have here is we have our resistance marked, we have our support marked, and when we're inside a support or resistance, what we want to do is buy low and we want to sell high. All right, I like two confirmations at least. So 1, 2 is enough. So here I would have been looking to sell. 1, 2 is enough. Here I would have been looking to buy. Do you understand? So I wouldn't have gotten involved in this probably, and this, or this, or this. But I would have actually gotten involved with this, which I did. So what happened to me, when you guys take a look at the screenshots that I'm going to post up just in a few minutes, you can actually see that what happened with price here is that it actually came up and I was in good profits. And I did post that, all right? But what actually happened was that this was actually just after 5. So if you look at this candlestick here, this was the 4:30 candle. So when 5 o'clock came in, because there was news, there was the United States oil inventories yesterday. So news kicked it out, came down, all right? Did the exact same thing in this area here. We should actually backtest and see if there was news on Monday, 23 January. Let me think. Last week, Monday. So we came into this area and then we shot back up. So when I noticed this is where I actually opened my second trade, all right? So my first trade looked something like this. Over here, my stop loss was below the zone, not below the wick, but below the zone, all right? And then my take profit was supposed to be over here. So I was looking for approximately 2,900 pips, all right? So this was my first trade, all right? Even after 30 minutes, I kept on holding because this was actually a reversal candlestick, all right? So I said to myself, okay, no, it's fine. Let's just keep the trade open. If it hits stop loss, it's fine. And because I used proper risk management, I did not really feel this stop loss. If I now take a look at my second trade, right? My second trade got into profit. So after all this news, stop hunt and whatnot that was going on here, I actually saw price coming back to the upside. Now, my entry was a bit earlier, okay? My entry was in the space over here. So I like to use my 5 minutes when I'm correlating with my 10 minutes, with my 30 minutes, all right? And on the 5 minutes, what I had actually seen is that in this area over here, so the market came in, all right, created a higher low. After the creation of this higher low, I wanted to see a retest of this area, and that's what I got. All right? So I got a retest of this area here on the 5 minutes. I love the 5 minute because it produces such good entries. So when it failed to close below the zone, what did I do? I opened my trade. All right, with my trade being open, I let it breathe for a while. I didn't put my stop loss immediately, but my stop loss would have been here. All right, and where would my take profit have been? My take profit would have been actually over here. So it ran, only hit take profit at 2200. We said our entry was 33375 minus 33375. Okay, so this would have given us 3,970 pips, all right, which is 397 points. Now, I did not catch the full value of this. I took my profits at 33740. All right, so as you guys can see by this screenshot here, I took my profit at 33740, which is around this area here. This is where I took my profit. So 3,400 pips. This was my trade. All right, I opened multiple positions. Show you that now. All right, and then basically the take profit was hit, and it actually went all the way to my zone. So what we actually had on the monthly time frame. All right, although the price was pretty bullish on a monthly time frame since October. All right, so we had this area over here. All right, price closed above, came into retest for the month of December, and then now it looks like we're going up. All right, so looking at the monthly time frame, most people would have seen this as okay, because last month we rejected, all right, and we closed up bearish, we're actually going to push down to the downside, but we're still in this area here. This is a resistance turned into support. So on a weekly time frame now, what you can actually see is that last week is when we tested this area twice. All right, so we tested it in December, we tested it in January. Now again, you would have thought that this week we're actually pulling down because this closed bearish, but this did not happen. So for me personally, this was I was a bit conflicted because I was like, okay, is this an actual trade? Because we had an impulse, all right, and I thought this was a correction, and I was actually expecting the market to continue pushing to the downside, all right. But when I correlated it with my 30-minute time frame and all my other time frame, I actually realized that the market was still pretty bullish because of this, which was completely visible on the 4-hour time frame and completely visible on the 30-minute time frame. Right? So I like to see 2 touches, and then the third one is where I take my trade. I hope you guys learned something from this YouTube video. I will see you guys in the next video. I will try and be a bit more consistent. Please don't forget to like, comment, and subscribe so that obviously I can post more content for you guys. But yeah, hope you guys have a good day. Great stuff.